All right, so we're going to jump in here. This is we're going to start the week here by talking about how to trade through a bear market. I thought this would be a good way to kind of set the stage because obviously, if you look at the S&P 500, you can tell that we are in a bear market, and traders frequently have been asking, over the last few weeks, last few months, how do you trade through a bear market? Do you just go short? Do you trade? What do you do? How do you make money? So if you're looking at the S&P 500 right here, and by the way, thank you guys who are tuning in for this special episode. I hope you guys really enjoy it. It will be recorded and saved so you can watch it later down the road. So this is the S&P 500, and since January, we've been on a pullback, and we've pulled back substantially, over 20%. This is a significant pullback in the market. The last several recessions were a drawdown of around 24, 25%. So, we're already in, from how much the market has pulled back, recession territory. But of course, recession is not defined by the percentage the market drops versus the high. There's different criteria for an official recession, and that's an economic definition. So to set that aside, we're in a bear market, and so we would define a bear market as a market where the overall momentum is to the downside, where we are going sideways. Certainly the S&P 500 being below the 200 moving average is indicative of being in a bear market. And if you looked at the IWM, which is the Russell 2000 small cap index, this has been really beaten up. I mean, this is down substantially, and I can just change my time frame here. Let's see. So we'll switch this to 200 here. So you could see that this has really gotten knocked down pretty badly. And as many of you know, I focus on trading small caps. So this has been a difficult year so far to be a small cap trader. And so I thought today we could talk a little bit about how to trade through a bear market. And as I jump into it, I'm going to give you guys a couple things that you can download and that you can review that will help you as you're trading through a bear market or trying to better understand how to trade through choppy markets. And I'll share with you some of my metrics. I want to remind you guys, as always, that my results are not typical. I share my metrics with you not because I want you to assume that those results are typical or that you're going to achieve a similar result or anything like that, but because I want you to know that the person that you're learning from right here today in this episode is actually a profitable trader, actually knows what the heck they're talking about. So I do have my the audit of my broker statements right here. And you can see my broker statements on the website, but this shows over $9 million in profit. Started in January of 2017 with $583 in my account. So from $583 starting balance to over $9 million, average monthly return, $159,000. And on this page right over here, I show a percentage return of about 1.6 million % on that small account. All right, so if you want to learn more about the markets, I think you're learning from someone who certainly knows what they're talking about and is verified profitable. So I would just encourage you, when you're getting your information out there, if it's free information on YouTube or wherever it is, make sure you know the person you're learning from is credible. Okay, so let's pull up my metrics for the year so far. And this is going to help set the context for where we're at. So January to May, right here, we're in mid-May, and I'm sitting right now gross profit on the year at about $475,000. Now, if we adjusted this and changed the date to 2021, just for comparison, do just year over year. Last year at this time, I was at 1.8 million. So you can see without a doubt that I made a lot more last year than this year. If we looked at 2020, the same period of time, you would see that I actually made a little bit less, $355,000. So my profits for sure are driven by the type of market that we're in. In a really hot market, I can crush it. In a colder market, I have to be more conservative. And the market was very cold in the first quarter of 2020 because that was when the pandemic was kind of kicking in, and that's when we were getting into this the market was having this big drop. As you can see right here, this was the first quarter of 2020. So things were really, really bearish and pretty scary. And then they rebounded, pretty hard. But if you look at first quarter of 2021, we were in, a pretty solid bull market at that time. So a bull market, stocks are at all-time highs, they're moving higher, they're squeezing, super strong momentum, and it's a rising tide that kind of lifts all ships. So whatever you're trading in a bull market just seems to be easier. And if you've traded in both, you can attest to the fact that when the market's hot, it feels so much easier. And when the market's cold, it feels like everything can be a bit of a struggle. And it's like, wow, this is really difficult to trade. Okay, so let's talk about how to actually trade through a bear market. You can make money in a bear market. I have proven that. I am making money in a bear market right now. The last, the last 2 weeks, the market has been, you can see here, if we zoom into the S&P 500, it's obviously been very weak. We're below the 200 moving average. We're selling off. So pretty much this whole month of May has been, not great. And my metrics for the month of May are solid. I'm at $73,000 in gross profit, 70% accuracy. Profit loss ratio, $1,200 winner, $842 loser. So these are the metrics that are supporting the strategy that I'm trading. So what's the strategy? What's my focus on how I'm trading right now? To trade through a bear market, you have to be super focused on trading the highest quality stocks. And so I am going to be trading less than I would trade in a bull market. There will not be as many opportunities, but there will still be opportunities. Look, just yesterday, SIGA, this stock, made a phenomenal move from $9 all the way up to $17. That's a 100% move right there. So those are going to happen. You're going to see opportunities like that. And your job, if you're a day trader and you're trying to trade through a bear market, is to have the discipline to wait for A quality setups. So let's define what an A quality setup kind of looks like. And we'll jump over to the whiteboard here. So what I'm going to look for when I sit down each morning, and I'm going to do this in real time for you as well, as we kind of are breaking down the watch list. But as I sit down each morning, I'm looking for stocks, number one, that are already up 10%. I want to see a stock up 10% because that tells me already it's bucking the trend of the overall market. There's only a small handful of stocks each day that are going to be up that much. So let's look at our scan right here. In the entire market of thousands of stocks, if we focus on only stocks up over 10%, we've already narrowed it down to 2, 4, 6, 8, 10, 12, 14 stocks. So from 5,000, 10,000 instruments that you could trade, we've already narrowed it down to 10. All right, approximately 10, 15, right? Okay, now what are we gonna do next? We're gonna focus, number two, price between, generally speaking, $2 and $20. Will I sometimes trade a little higher? Maybe. Will I sometimes trade a little lower? Maybe. But generally, I'm going to focus on this price range. Why am I going to focus on that price range? That's the price range that most retail traders are most excited about. And that means if traders are excited about it, you're going to see higher volume, even in a bear market, on those types of stocks. And with that higher volume, you're going to see better follow through. That's what we want to see. High volume, better follow through. And that leads us to number three, relative volume of 5 times or up. All right, now let's look back over here. Relative volume. The relative volume on CBIO right now is 3,875%. So that far exceeds the 5 times minimum. In fact, all of these right now are exceeding the 5 times minimum, which makes sense because if they're gapping up 10%, it's because obviously something is happening. Traders have already gotten interested in it, and that interest is what generates the volume. Now, preferably, we're going to want to see, number 4, a news catalyst. This is important in a bear market because this is what's going to drive the stock up. This is the reason the stock is up 10%. This is the reason the stock has 5 times relative volume. Now, the reason the stock has the potential to go up, plus 30, plus 50, or plus 100% will be because the price is popular and, number 5, float under 20 million. Preferably under 10. This would be preferred. All right, so now let's look over at our scan again. So if we're looking at this scan here of these stocks, we can now rule out, generally speaking, CBIO, SN, MP, VWM, or VMW. So now if we just focus on which of the top gappers here of more than 10% have a float of less than 20 million shares, we've got 1, 2, 3, and then this one has no float. We've got to do a little more research to figure out what the float is. So we've now narrowed down our potential watch list to 3 stocks today. All right, now it's possible, because it's still early in the morning, it's possible that another stock will pop up and that could very instantly come into play and be in focus. It's also possible that the most obvious stock today, let's just say CBIO, well, it's a 31 million share float. It's a little higher than I typically would like, and we could check out the chart and do a little due diligence on it. We see, oh, well, it's a little on the cheap side. It's $1.95. That's not really my favorite price range. Okay, so that's not great. The float's a little higher, so probably not going to go for it, but maybe, we'll see. It's a possibility. The second leading gapper is GovX. So this one's up 37%. It's got a pre-market high of about 208, but again, it's a little on the cheaper side, but that's okay. It's because it's the leading gapper, because the float's 9.2 million shares. That's going to give it probably a little extra boost. So that's worth watching, but I'm not going to take a trade on it quite yet. Just kind of watching. So, and it's still, as I said, a little early. So your best bet for how to trade through a bear market, and it's really simple. It's to trade less. It's to have the discipline to trade less. It's to have the patience to wait for A quality setups. And if you can have the discipline and the patience, then you can get through a bear market. And this is something that's kind of funny. So many traders come into the market when it's hot because, whatever, they see people sharing all the money they're making, whether it's on social media or it's a friend or whatever it is, and they're like, oh man, everyone's making money, I'm missing out. FOMO kicks in. So they come into the market when it's really hot. And the problem is, maybe if they start trading with real money, and some of you have, in a hot market, you'll hit the ground running, you'll have a little beginner's luck, you'll make some money, but you're not really learning a lot of discipline because the market is so hot. And then when it cools off, you're forced really quickly to either adjust or you're going to start losing money. And some of you have already gone through this experience of losing money as the market cools off, and you can recognize how frustrating it is and kind of how concerning it is, and it's stressful, right? It's not fun. So one of the things that I'm kind of spending a lot of time thinking about is, how can I encourage traders while the market is cold to spend this time focusing on learning? Because this is a great time to be learning. Yeah, and I could show you the whiteboard here again. This is our list. This is a good time to be learning when the market's cold, because if you can make money in a cold market, that's setting you up with a really solid foundation for when the market picks back up. If you can only make money in a hot market, you're limited, right? And if you give back all that profit in a cold market, then you're really not doing well at all. So probably one of the biggest marks of a long-term successful trader is going to be his or her ability to trade through a bear market and to carve out profit. Now, it doesn't necessarily mean you're making as much as you would when the market's really hot, but that you're getting something. Now, to answer that question that I posed earlier about trading the short side, some people would say, well, Ross, the market's bearish, just trade to the short side. That's a large cap strategy. If you're trading large caps, then you're just trading with the tide that goes up and down. I'm a small cap trader. And so small caps, what we need, whether you're long or short, is volatility. And what you don't have as much of in a bear market is that volatility. You have small cap stocks are just kind of grinding lower. So if you were swing trading those to the short side, maybe you could do okay. But a lot of them have light volume. There's not great liquidity. So to be swing trading large positions is pretty risky. So what most small cap traders do is we're actively day trading on the days that they're really moving quickly. And so on a day like today, we'd be focusing on, GovX and CBIO and these other stocks that are on the scan. But if there's nothing really moving and the volatility in the small caps market is just limited, it doesn't matter whether you're long bias or short bias. There's not enough range to make a lot of money. And so as a small cap trader, bear market doesn't mean just flip short. That's not, in my opinion, a successful approach, because you just don't have the volatility. So if you want to flip short and trade short during a bear market, then what you're going to be focusing on is trading large caps to the short side. And again, that's just going to be more of swing trading the grind lower. And the reason we don't swing trade the grind lower on small caps, like I said, is because there's not enough liquidity. They're just not popular enough, and there's just too much risk in that. So that is just a different strategy for trading the bear market. And some people are going to go for that, and that's fine. My strategy is to trade less and to wait for these really good quality setups to show up. And then when they show up, I'm going to jump on and I'm going to be aggressive. So we've got about 90 seconds till 9 a.m. I want to watch to see if we have any breaking news at 9 a.m. because news usually comes out at the bottom of the hour, 8:30, and at the top of the hour, 9, and then again, 9:30. And that's true going the other way, 8 a.m., 7:30, 7 a.m., 6:30, 6 a.m., etc., going back. So usually it's top and bottom of the hours where we see news headlines come out, and that can be an opportunity where all of a sudden a stock pops up, takes off, and boom, just like that, we've got something to work with. Now, for those that are tuned in, I'm going to give you a link where you can download my small account challenge pre-trading checklist, and this also has this is a list of I believe it's 10 of my. It's a 10-page PDF, so it breaks down a number of my favorite trading strategies, sub-strategies, patterns that I encourage you to focus on when the market is cold. So when the market's cold, you've got to focus on highest quality, best quality setups. So I'll put a link right here where you guys can download this, and I'll just paste it there. So check out the pre-market checklist if you haven't already. Let's see, we've got 10 seconds till 9 a.m. So let's see if we get something here at 9 that gives us an opportunity. It's possible that we will. It's also possible that we won't. And if we don't, then we're going to be sort of switching our focus to making the most of the gappers that we have and trying to hone in on which one we think is going to be the most obvious. Remember, what creates that 5 times relative volume is a stock being obvious and millions of traders all being dialed in, and this is the one that we like. That's what creates that high relative volume. And it's what sustains it as the day goes on. By the way, for those that are tuning in here for this this special episode here on YouTube, thank you guys for being here today. And for every thumbs up we get, I'm going to donate $1 to charity. So we're going to get this week off to a great start. So thank you guys for being here, for being tuned in. Hit that thumbs up. By doing that, you are donating $1 to charity. Yeah, it's through me, but hey, I'll donate $1 for each one of you guys that hit the thumbs up. So thank you guys for doing it. All right, so 9 a.m. has come and gone, and I'm not seeing, a whole lot. BRQS has news here, form strategic partnership. So I do have a news feed. This is lower price though. ETTX acquisition, FUV. We've traded that one before. Yeah. So again, just checking the headlines. DRTS. This is one of the things that's important as a retail trader and as a day trader, is being on top of breaking news. So we're watching news. I've got a news feed API that goes right into our chat room at Warrior. So I see the news headlines posted right there. All right, so the couple that came in haven't really resulted in stocks squeezing up or doing anything super exciting. So it seems like we're probably going to be sort of set on the scan that we've got. So let's go back to the top. So CBIO, my problem with this one, of course, is that it is on the cheap side, but it's obviously gapping up a lot. So, I generally don't like this low price stuff, but man, the stock is up 150%. So at the same time, you don't want to totally shake your head at it. We'll keep it on watch. It does have news. I don't know. We'll see. SOPA, there's some news on that one. Let's check that real quick. not really doing anything yet. REVB has news as well. So this is part of the process right now of trying to find the right type of stock to trade. So this this pre-market episode here on how to trade through a bear market is now sort of transitioning into actually looking for trades. So that's what I'm doing now. And so I'm going to be referring back to my list, sort of my 5 criteria for a stock being worth trading. And hopefully we find something that matches that fairly well. So CBIO, you could see it moving higher. So this is probably important to watch. The high is 102. What sometimes happens is these break the whole dollar and then reject. And so you want to be a little careful. Mark the high there at 102. If we break that level, that's a possible buy. But only maybe because it's extended. It's very extended on the 1-minute chart. You know, it literally has gone from 40 cents all the way up to $1, and it's very common that these will have resistance at $1. That's basically the target, and then they reject. So I'm going to wait for a pullback. You see now a topping tail is forming. If we talk about criteria, this one matches the relative volume and the rate of change very well. You've got the percentage gain, you've got the relative volume, but the price is not ideal and the float's not ideal. And it does have a catalyst. So it's meeting 3 out of the 5 criteria. If it met 5 out of 5, I'd be comfortable being more aggressive on it. Because it meets only 3 out of 5, have to be a little bit more conservative initially because it's just extended. But you may get some continuation, so we'll just watch it. High volume on this red candle, and this is a gravestone doji with that topping tail. So bordering on a shooting star. It's a very bearish candle. It's an indicator of a possible reversal. It's about 904 right now, almost 905. SIGA, yes, we did have a big move on that one. However, I think at this point, it's on the backside of the move as it broke down here and broke below the VWAP and couldn't get back above it. We're on the backside of the move. So I'm not really liking that one right now. So starter there on CBIO at 101. This one, I'm looking for it to break through 102 because you can see right here, there's 102, and then the add is 103 and 104. Watching 104 and 105 for it to pull away. Adding at 104. And then we want to add at 105. Let's see, we've got 104 there. I am not liking that it's not breaking, so I'm unwinding that trade. You know, and the problem with this is that if you get in at this type of spot, because you already have a reversal indicator right there, it needs to go immediately. And if it doesn't, that's no good. The high is 102, so the entry there was as it broke when it was 101 to anticipate the break of 102, hit a high of 104, added at 103, and then it was locked right there. So first you have this red topping tail candle. Now, if this had closed green and broke through 104, 105, then that becomes a bear trap. The bears are short against this doji, this gravestone doji, and then you get the strong squeeze through 105, 106, 107, 108. That can happen. It didn't happen on this one. So now you just have another high volume candle that looks like a reversal. CNCE, someone mentioning this one. Yeah, so this one has a 36 million share float. It is up 14%. And let's see, right now it's easy to borrow, so I'm kind of not sure that I would want to take a trade on it, but we'll keep it on watch. Okay, let's see. We've got, what do we have next? We'll switch back to GovX and take another look at that. CBIO will be on watch closer to the open. We'll see whether or not it squeezes through. Would leave the next order around 108 just so it's ready. GovX is pulled back here down towards, it's sort of just below the 9 moving average. We've got about 22 minutes to the opening bell right now. Again, thank you guys who are tuned in for this episode of how to trade through a bear market and now transitioning into live trading and looking for opportunities. So the trade on CBIO, a $400 winner, 30,000 shares made, you know, with a $30,000 position. I mean, it's a pretty small position for me, relatively speaking, but only made about a penny a share. Let's look back at CNCE. Yeah, so you can see how it popped up there to a high of 527. Now it's back under 5, right? So this is where we're seeing that pop and the drop. We're not seeing that continuation. We've got to be careful on these. I want to be focusing on what I think are the obvious stocks. CBIO meets the criteria 3 out of the 5. It's not perfect, but it's... The thing is, because some traders are certainly focusing on it, it takes their attention away from something else. So this can be one of the challenges of trying to figure out which stock is the obvious stock. I want to put up a reminder, as always, that trading is risky. My results are not typical, in case you didn't already know. I did say it a bit earlier, but I'll say it again now. There is no guarantee that you'll be a profitable trader. All right, so please take it slow, manage your risk. I would encourage you to practice in a simulator before you put real money on the line. It's about 9:09 right now, so 21 minutes to the opening bell. LEJU from Friday as a continuation stock. So one of the challenges with something like this is that it's actually down 12%. So it's gapping down right now versus the close up here. The float on it is a little, oh, actually it's not bad. It's under 20 million, so that's not bad. Let's see, LEJU. It's a reverse split, 13 million share float. 200 moving average is around 939. So that's all fine, but the problem is it's not obvious. There's not enough people that are going to be watching it. The criteria that I broke down here for a bear market, we're going to be looking for a stock already up at least 10% with a potential to go to 30, 40, 50, 100%. We want to see a price preferably between 2 and 20, relative volume 5 times and up. We'd like to see news, and we'd like to see a float of under 20 million shares. So CBIO meets 3 of these by being up 10%, being relative volume 5 times and up, and being a news catalyst. The float's a little higher and the price is a little lower. So it doesn't meet those 2. Again, you know, there are times where we'll have great trades on a stock that doesn't meet all the criteria, and that's okay. The setup on that one was a break through the high. Anticipating the break through the high, you had a reversal indicator. Traders get short against that level, and then if it breaks that level, you can have a strong whip, which is caused by a bear trap. It did open up, but only to 104. So there were hidden sellers or whatever it was. There were people unloading up there, or maybe going short. Now you have the first red candle forming, and you've got your 5-minute pulling back. All right, we've got 19 minutes to the opening bell, CBIO, GovX, 2 leading gappers. GovX did a false breakout right here. First 5-minute candle made a new high, and then it rejected and went lower. So that's already kind of telling us this one's a bit choppy. That was on that candle there. This one was a double top. VWAP is down around this level here. It just feels like it's pulling back a little bit right now and doesn't look that strong. Maybe it picks back up. ETTX, I think that someone said this is an acquisition. Yes, it is. Yep, so acquisition on this at 21% premium approximately. Looking at the S&P 500, so we have this perspective of what's going on in the overall market. You can see that off of the low right down here, we had a bottoming tail. We broke through the low, pierced the low, came back up. If it was a green candle, we'd kind of say that that's looking good. It is a hammer, hammering out the base. It sold off, which is bearish, but then buyers were able to rally the price back up, which is bullish. But the candle closed red, which is a little bit bearish. So it is basing out a little bit here. Markets, so the high was 97. but that was caused, looks like, right at the open, and then it sold off all day, rallied back up strong into the close, and now we're gapping up a little bit. So, you know, that's good. We're in this channel. We might get a relief bounce in the market the way we did back here those first couple days, but that's bear flagging ultimately back up to 408, or maybe if we are really stair stepping, we won't even come up that high. We'll run into resistance, you know, down in this area here, maybe around 400, or maybe it doesn't even, maybe 400. So some traders might look short against 400, but again, that's trading the overall market. I'm not going to try to do that here. CNCE, let's see, let me look back. Yeah, well, 580 is the pre-market high. So it's possible it gets back up there. I'm not totally sure, but have the chart on watch on the side just in case it starts to curl. GovX broke VWAP. Let me look. Yeah, so there you go. So that was a sell-off there, break a volume weight average price, so pulling back. Those of you guys that have been tuned in a little bit earlier, you already know this, but for those who haven't, I had mentioned for every thumbs up we get today, I'll donate $1 to charity. So thank you guys for hitting the thumbs up. I appreciate it. And we started this episode this morning with a breakdown of how to trade through a bear market, and I also gave you a link to download my my pre-trading checklist, which is the checklist that I would definitely encourage you using during a bear market. All right, the best way to get through a bear market is to be disciplined, so I encourage you to focus on trading the best. So this was part of my small account challenge. Whenever I do small account challenges, I'm trading with just like a couple $100 or whatever it is. I want to focus on best quality setups, so I encourage you to download this, and then you can print it out and have this next to your trading station each morning. All right, so we've got the high there, right? Scanners here. Last Monday for me was a no trade day. I didn't take any trades. Today I've already broken the ice with one trade, but wasn't really that great. More or less a break-even trade. I mean, you know, $400, but on 30,000 shares, you're looking for $1,000, $2,000. So the risk on a 30,000 share position is 1,000. So it wasn't a very good profit loss ratio. I'm glad it was a winner, but and probably one of the reasons it was a winner was because of an early ability to recognize or an ability to recognize on the early side these red flags that it should have ripped. It should have squeezed through that level. And if it's not, that's a problem. So does anyone see anything that I am perhaps missing? I think I'm looking at what are probably the most obvious stocks this morning, but just want to make sure. We'll mark the high on CBIO at 104. SIGA, I just think it's on the backside of the move. LEJU, it's a nice setup for continuation, but I don't think that's going to go either. CBIO currently has a cross level 2. This is a very light volume false breakout, it appears. TNXP. No, that looks too bearish. CMRX, AGRI, no, not interested in either of those. AGRI, not interested in it, not because it's not a relatively bullish chart, because it is, but let's check the float. The float, it's not bad, 13 million shares. The problem is this one, it's in the cannabis sector, growing equipment or something like that. It's been choppy and thickly traded. I've traded it before and haven't done particularly well on it, so I've kind of lost interest on that one. Sometimes you get to know a stock and you realize, that's not really the type that I want to go for. I'll look at SIGA again. Let's see. SIGA. So my initial bias on it is that it's on the backside of the move. You know, short of there being fresh news, I think, so what level would it need to break to really be bullish? You know, yes, this is a pop, but it's kind of a relief bounce off the low. It's a pop back up to the volume weighted average price. If it could break through VWAP, then that's certainly more bullish. It is also easy to borrow. I'm actually surprised it doesn't have short sale restriction. I would have thought it would because of the pullback versus the high, but it does not have short sale restriction. So you've got this high of 1747. You've got this pivot around 16. You know, I think it needs to break through the VWAP. I just think it's on the backside of the move with this high volume red candle. So it takes a lot of volume for something to reclaim those levels because there's inherent bearishness. Inherently, traders like myself are going to be cautious and say, no, I don't know if it's not perfect. We're sitting on the sidelines. That's less volume. That's less buying. You're going to have bears, short sellers who are going to say, I think I'm going to be a little bit more aggressive. I might short this thing. I don't think it's going to get back up. So all of that results in this sort of fighting against a current. And I think that's the problem. So I want to try to avoid getting into that kind of trading. You know, in a bull market, yeah, this probably would have been at like 20 bucks, but we're just not there right now. So adjusting expectations is important. You start trading stocks below VWAP. I mean, dips are good in a bear market, but I'd like to dip trade things that are relatively bullish, and I don't consider it to be bullish when it's below VWAP. And I will be a bit more cautious buying dips if the volume is low. I don't feel quite as you know, confident when there's really light volume, because it's telling me there's just not enough traders that are watching this thing. That's what that volume is communicating. So we want to see high relative volume. We want to see 10%. We want to see price between 2 and 20. We want to see high relative volume. We want to see a news catalyst. We want to see the float under 10 million shares, ideally. So I know what I'm looking for right here. And I was willing to take a trade on CBIO that meets the criteria of 3 out of the 5. You know, but I don't want to. This is where you have to be really careful in a bear market. You can very easily dig yourself a hole. You know, in 2 trades, you could be at max daily loss. And then you're sitting there thinking, why did I even bother? There was nothing strong enough today. So CNCE, you know, this one I think is worth keeping an eye on because it's got the pre-market high up there at 580. We've got about 9 minutes to the opening bell, so we're getting closer to the open. And if you look at my my trades for the month of May, so the last couple weeks, which has been especially choppy, I had, you know, basically I've had a couple of no trade days. Hang on one second. Sorry, I've had a couple of no trade days. I had one red day, and that was a day where rather than being patient, I over traded, and I actually was trading at the short side on the first trade that got me the loss. So that was totally avoidable. I shouldn't have taken any trades on that day. And then I had no trade day on Thursday, no trade day on Monday here. And then Tuesday through Friday was solid. And the first week was good. I mean, these are I've only had really one day that exceeded what has been my daily goal, but that's trading through a bear market. You take what you're given. You make the most of it. That's what it's about. So, you know, I was talking about those of you guys that watch the Discovery Channel, you know, The Deadliest Catch. and how the king crab fishery, they closed it this year. And these guys have, all this money invested into this fishery. They've got their quota. It's basically just like that, cut their potential profit for some people by more than half. And so now they're just like, okay, this is just a year to keep my head above water. This is just a year to, make sure I don't lose my boat. And I'm going to have to hustle and do things maybe, I wouldn't typically do. Some of them are going into different fisheries and stuff like that. Others are just, sticking with what they're good at and fishing a different kind of area, but recognizing this is just going to be a little bit of a slow stretch, and there's not a lot you can do about that. And that's the same with the market. There's nothing we can do about the fact that the market, there's all this political stuff and all this economic stuff, and there's nothing we can do about that. That's just the way it is. So, we just have to work with what we're given. Yeah, so you've got a bit of a head and shoulders pattern, and the edge of the shoulder is right up here around 199. So that's got to get back over 2. We'll see if it can. It feels a bit more thickly traded. So GovX, I would say it's worth watching if it can get back over 2. CBIO is worth watching if it can get back over $1. We could certainly see on this a squeeze. I mean, I'm not writing off either of them. I'm keeping them both on watch. But this is definitely base hit market. Get your base hits. Be grateful for the opportunity to sit here and trade. Don't overstay your welcome. Don't get sloppy, and live to trade another day. You can't trade the hot market if you can't get through the cold market. So study up, do the best you can to become a profitable trader even in a cold market. It's not easy. There's no guarantee. Trading is risky, but really do everything you can so you put in 100%. So the two that I have kind of on watch right now, as we're coming closer to the open, just under 5 minutes to the opening bell here, GovX and CBIO. So CBIO, I like the idea of it. I think that it has potential to squeeze and halt up. You've got quite a bit of room to the 200 moving average. GovX, we've traded it before. It's been a little choppy. It seems a bit more thickly traded. It actually has almost the same amount of volume, but in terms of money trading hands, it's twice as high because the price is twice as high as CBIO. So right now you're consolidating under this level with 205 high. Actually, sorry, 205. What was it? 208 high. CNCE has pulled back a little bit. Thank you guys, by the way, who have hit the thumbs up. You're helping donate money to charity today. So we'll be sending some money off a little bit later today when I see what the total is for thumbs up. So you could see on GovX, the pattern that you've got here, it hit a high of 96 and then a 8-cent red candle back down to 88. Bounced back up here, so you're sort of in a little bit of a 1-minute ABCD pattern. Not perfect. CBIO, this one, because it's up 153%, I feel like it's probably worth watching a bit more closely. But the level that needs to break is certainly $1, and then $1.01, $1.02. We've only got about 3 minutes to the opening bell. So what we're going to want to do is we're going to watch to see how this trades at the open. Does it rip? Does it really open up? Does it squeeze into a halt? Is the green on the tape just like total green, or is it chop? CNCE is pulling back. Yep, I see that. So the name of the game for trading through a bear market is discipline. And that means sometimes, like right now, wanting to trade, wanting to hit a winner, but there not being anything that really is suitable. And so that means sitting tight and being patient. And then when something does set up, you're ready to hit it hard. And that's the whole idea with learning during a bear market. You learn during a bear market. You keep your head above water. You trade in the simulator. You focus on improving your strategies. And then when the market starts to heat up, the market is a lot more forgiving to trade in when it's hot. I mean, it is. And that means you can sometimes get away with being a little sloppy and not being as disciplined as you should be. But you know, trading in a hot market is better. But that's not the market we're in right now. So we know the edge of our shoulder here is 99. So now we've got this inverted head and shoulders pattern. You can see the stack of sellers there, 22,000 at 198, 17, 18, 15, 16. So stacked at 97. About 90 seconds to the opening bell. Come on in, girl. So one of the challenges here, when you've got a minute to the bell, is you know, you've got these two that we're kind of looking at. Which one is obvious? What kind of 5-minute pattern is this on GovX? I don't even know. You see the 1 minute, you know, kind of head and shoulders to an inverted head and shoulders, but neither are perfect. So it's really not a super clean 5-minute pattern. So 5-minute traders are probably going to sit this out. They're going to look at it and be like, I don't know, this is weird. 1-minute traders probably not feeling super comfortable buying right here at 99 because the 1-minute entry would have been at 96, but then you don't want to buy there when you've got resistance right at $2. So that's no good. So I think it's not opening up in a big way. And then CBIO, I suspect that there's a lot of traders that are watching this, but there may also be traders that are in with big positions that are going to start trying to unwind it. So, you know, who knows? I mean, there could be people who bought 200, 300, 400, 500,000 shares down here at 75 cents or whatever and are going to be trying to sell it as it goes up. So let's watch CBIO. The halt level is $1.09. Watching. It seems like there's sellers here. Quick long there on CBIO at $1.02. We want to look to add at $1.04. But I'm going to see. So the thing is, I'm just going to cut the loss there on it because you can see how it's a rejection. It hit that high there and then immediately came back down. So ended up being a $1,200 loss on that. It's a small loss. And, you know, one of the things that's important in a bear market is keeping those losses really tight. So you can see my average losers for this last month here have been about $842. So keeping the losses relatively small. The winners have been bigger, not today, but on average. And with that, CBIO, you know, that was the spot it needed to break. And it rolled over right there. It went into that trigger at 102, 103, 104, and then it rolled over. We can check in with GovX. Similar story there on that one. So as we sit here now, I'm going to sit tight and I'm going to watch to see if we get something else that opens up between 9:30, 10, 10:30, and 11. That's kind of the name of the game right now, is just to see if something pops up that becomes obvious. Because right now, we don't have something that's obvious, and that's a problem. All right, so with that, I'm going to end the morning show here on YouTube. I'm going to keep broadcasting for Warrior members, Warrior All Access members. I'll put up my disclaimer again as a reminder that trading is risky in case you didn't already know that. And I will encourage you to check out a couple of videos if you want to learn a little bit more about my strategy. I'll put a video right up here on my pre-market trading strategies. So you can check out my pre-market trading strategies right there. And I'll put another video right there on algo trading, high frequency market makers, high frequency trading. All right, so check that out right there, and I'll see you guys first thing tomorrow morning.